Hello, everyone. How are we doing tonight? Can you guys hear me all right? Give me a quick confirmation. I am doing great, Alien. Thank you. It's a little hard in times like these, and I think I talked about it a little bit in the price action reviews um when we were going down, probably in July here. When the markets are this horrible, and by this horrible, I don't mean the price action, because as intraday traders, well, at least for myself, I don't mind if I'm shorting or going or longing. I'm just following the trend. But when the markets are like these, it's bad. People out there are losing a lot of money, and you see it. I don't know if you guys follow the news at all, but everything's going to shit. People are saying the current state of the world is bad. That's just because everyone's losing money. That's the truth. So it's good as traders because this doesn't affect us, but it's sometimes a little hard to make that separation, I guess, with the people in your life, with what you see all going on all over the world. So I just wanted to have a little moment for that, a little thought that yes, we are traders. Yes, we can make money when the markets are going to shit, but we have to remind ourselves of what the responsibility that comes with it to shut the fuck up. When everyone says it's going bad, just stay in your lane, keep making money, keep following your things, keep trading. I just had that realization today, right? It's one of those moments, and they make me look back and realize the luck we have. So, some small things like this. But for now, we can focus on price. And what did we do today? We ran the fuck down, as anticipated, right? Clear objective lower. This was our first objective lower. And of course, after that, we talked about those as we were going up, these levels, right? You can refer to them as relative equal lows. You can refer to them as old consolidations. You can refer to them as supply and demand zones. I don't care what you call them, right? The points at where the market's consolidated to form lows are going to be objectives in the future. That's just how it is. You look in the past, that's what you see. It is that simple. That's how the markets work. It takes time to change a trend. We have a lot of orders here. We need to go pair those orders. So definite sell side objectives. And as you can see today, we hit one of our major targets, even though we did not hit the equivalent on ES here. If we look at SMT, we'd be looking at actually this level. Wait, where is that level? That level all the way up here. As you guys know, when we consolidated, we had a lot of SMT, a lot of divergence, but just all of these equal levels here on NASDAQ. I don't know if those are equal. Let's actually look. 5797.25 and 5797.5. So actually, yes, this one is just a tad bit lower actually. So very clear objective here for our run on ES. Do I anticipate that this SMT is enough to stop it on the short term? Perhaps. So going into tomorrow, I might look for some retracement longs, but long term, definitely not, right? Midterm, let's just say. We are definitely going to continue going lower. But how about today? Right? How could I have known that we are going lower today? Well, by looking at the NASDAQ chart, I would have two possible outcomes. We just ran down very aggressively. The trend is your friend. I don't know who keeps saying that sentence in the Discord here, but I love it. So I'm stealing it. Sorry if I can't give you credit. I don't remember who it was. If someone wants to take credit, feel free to do so. But what does that mean? I want to trade with the trend, because if we're talking about statistics here and probabilities, right, which is all things that I have available and you guys have available if you have right statistics, right, we know that price trends more often than not. It trends more often than it reverses, right? Very simple stuff. Then I know that by having a very simple bias, for example, here you had an inside bar, you had a previous day down close, so now my target is going to be lower. This is part of the bias analysis, which is actually logic that I personally learned from T-Trades. So I don't know who started it first. I'm not going to get into that, but your target for today would have been lower here. And this is also for the daily closing direction. So you can trust that it's going to go here, and you can trust that with 75% plus accuracy, it's not going to close above the open. So your job is to buy above the open, is to sell, sorry, above the open. But for me, trading only the New York session, I need to, sorry about that. Let me just fix that one. All right. I need to make sure that I can align with that position, because sometimes by New York, we're far past the open and your best short opportunities. I still want to interact with that session because that's the highest probability session for me. So how do we do that? We go down the time frames. But for me, bias was very simple. And if you want more insight, we went into that fair value gap right here. And when I look for continuations, I always look for the closest array. We went into that fair value gap on ES. This formed lower time frame SMT, right? I think we discussed this quite a bit ago, where candle to candle SMT, right? Where, for example, this candle took out this candle's high. I will mark it out as such, is just lower time frame SMT, right? So it is the same divergence. It is nothing different. You believe in IPDA 20, 40, 60. I do utilize it sometimes, but not for the main reason everybody else does. I don't see it as an element of time. I see it as a nice mechanical way to look at short-term, mid-term, and long-term trends. But for me, I don't need to open it on my chart. I know that short and mid-term, we've been consolidating. Long-term, we're bullish. I don't need to have IPD 60, 40, whatever. But I did a study, which you can find in one of my price action reviews, where we discussed quite at length, I don't know if you were there, Faraz, about how I use IPDA data ranges in confluence with SMT to frame long-term objectives, long-term reversals. And that's something I will be discussing today specifically, right? But just to get back on track here, if I go down the time frame in my 1 hour, this is the SMT that we knew, right? It is the SMT from yesterday. And that went into that higher time frame fair value gap. So from that, I can anticipate an expansion. Once again, framing all the way to previous day low, which in this case is right here, but you also have, let's mark it out as such, you also have Wednesday's low in this specific area. Tuesday's low, sorry. So Wednesday's low, I'm having a hard time tonight, I do apologize, which is previous day low. And then you have the current weekly low, which is just Tuesday's low in this case. And even if we mark it out on ES here, very, very clear downside objectives here. You just had to get ready and time the markets right. And how do we do that? Well, for us, it's all about power of 3 in sessions, right? So if we go to a 15-minute chart here, look at our intraday price action. What does power of 3 tell us? Okay, well, we opened. I don't really care what happens on close to the open unless there's SMT on a specific direction. There's no SMT on the lows. There is some candle to candle SMT here. Is it right here? Yes. So with these bars, with these candles, which frames what? It's currently consolidating, right? Right near the open, we're consolidating. Okay, cool. What did we do after? We had a sizable move higher. This is how I find manipulation. So for me, this is manipulation. It's no longer about bias. Whether my bias is long or short, I know that if I'm trading that day, and see, this is where the market's open at 9:30 and we had news, wasn't it at 9:30? I know we had pending home sales at 10 a.m. Not at 9:30, sorry, at 8:30. Let me check. Yes, so we had unemployment claims, pre-line GDP, which was 8:30 news in this case specifically, which actually formed, oh no, I was going to say it formed the high of day. I thought it did, but it didn't. 7:30 right here. So we had news at 8:30. From this point on, I'm analyzing the markets. I know that with this structure, right? With this structure, I know that my highest probability trades will be short. But more than that, I know that trades short will be distribution and trades long will be retracements. So when I say the trend is your friend, is that from this point on, I know that any point I'm going short, I am treating it as an expansion, which means I'm not having retracement objectives. The retracement objective is my partial, and then I have objectives here, previous day low, current weekly low. And I know that if we are going higher, I'm trading a retracement, which means that my target will not be, for example, the high here. It would be the first premium inefficiency in this range. So from that point on, I know exactly what I'm looking for. If I'm shorting, I'm going to be shorting with the idea of an expansion. And if I'm going long, I'm going to be trading a retracement. And funny enough, I didn't get a piece of that short. Very sad. Well, at least I was very sad, because looking at the open, it is perfect. You have SMT, and I want to show it with precision. I was looking specifically at this high. There it is. So right here, you had very nice SMT between NASDAQ and ES right after the open. And if we look right here, 930, consolidated for 2-3 bars, and then we went for our Judah swing higher, confirmed with SMT. This is what I mean by textbook. It is a perfect look. My daily power of 3 tells me my manipulation was higher. I'm looking to short. The open, we have a Judah swing higher, a fake move higher, confirmed by SMT. That's my time-based manipulation. I'm ready to hit. Well, I was going to say execute, pretty much hit the trade button. Didn't sound so good after I was about to say it. But I just didn't get an entry. So I kept waiting for us to fill one of these arrays. So basically, if I use the inverse fair value gap here, I'm waiting for price to return to it. I was waiting for price to return to this, but we were just falling, right? And truth is, I have been hurt so many times trying to use ICT's words, catch the falling knife, right? When the indices futures fall, I used to just go about and I short randomly because I was going to FOMO in, and it messed me up a lot of times. So right now, am I mad that I missed this move? 100%. Because when you see price being so aggressive, just the fact that it invalidated this point, so for example, just closing below it, I would have entered on the open because I have all the signal I need. Worst case scenario, I have a slightly worse entry. Like for example, if you waited for it to get back into it, but I'm still in the trade. And everything, as I said, else is textbook. So as I've always said, if everything is perfect, it's an A+. But you can also take the A setup where everything is not perfect. I had to force the entry. So that's just one of those times. But personally, I did not take part in it. I didn't want to try and FOMO into it. And that's just a psychology area, right? A psychology issue. I know that I'm greedy and I had a lot of problems with FOMO when I started off trading. So I just don't want to get back into that. If you feel confident in that, then definitely do take those trades. And I mean, everything else was literally perfect. I mean, even those standard deviations aligning beautifully with the daily open and midnight open is, as said previously, perfect. So we have this. I did make some returns on the opposite direction. So we had our objectives here, right? Previous day low, current weekly low. So once those objectives are met, I can look to long. And as I said, I know that my longs are going to be retracement. So I'm not going to be targeting, for example, the high of the current session, right? I just call this opening range high, but the high at this range, right? What am I going to target? Well, I'm going to go to a 5-minute chart in this case, because in the 15-minute, as you guys saw, we didn't have any premium inefficiencies. And I'm going to target the first premium inefficiency. In this case, it is deep in premium. Does that change? No, that was my objective personally. I was looking for us to go all the way there. Oftentimes when I don't have any clear inefficiency that is close to equilibrium, I'll go even down once more in my time frame, and see in this case, you would have had literally a perfect exit on this price leg. So that was definitely something. So I do want to point that out. It's just something that I failed to do today. So I don't want to tell you guys, well, hey, you look at this perfect exit when I didn't trade it myself. But it is what I should have been looking at, mechanically speaking. If we just look down here, right, we'll notice right here, breaker block that was formed at this level. Now, what do I use to enter? Well, if we zoom in a little bit here, you'll find this inversion fair value gap. As you can see, we never traded back into it until far later. And as I always say, I'm not going to take the entry there because at that point, the move already happened without me, right? But I looked at this. This was my signal of I thought I was going to get in the trade. And then I waited and I waited and I waited. But then we finally traded back into an array. I did want to showcase it because I thought some of you might mention this, that you had that earlier entry, but for me, you didn't. What you did have as an earlier entry, and that's sometimes hard to notice with hindsight. Okay, I'm going to mark it out. But the easy entry, fair value gap, include the volume imbalance. You had this even if you did not include, well, actually, no. If you did not include that volume imbalance, that's not an entry. But nonetheless, the entry you should be looking for is, and why I marked out this line, let me just find the template for it. This is where the breaker was formed. What did we do on the next candle? We open and we retrace into a fair value gap. Now, this is sometimes hard for people to visualize because it's like, okay, well, that fair value gap is below my breaker block, right? Which in this case is this bar right here. This is your breaker block. And now your fair value gap is below, but I don't care. I need it to be overlapping or within close proximity. Is this overlapping or within close proximity? Yes. If I had an entry earlier above, then I would have taken it. For example, if this candle closed all the way up here, and that's why I wanted to highlight this inversion fair value gap, if we closed above the inversion fair value gap, I wouldn't wait for us to return to this one. I'd take the first available one. It just showed that in this case, the first available entry was on this fair value gap, and it turned out to be below. Okay, no volume imbalance. Just wanted to make sure in this case. So you'd have a very beautiful entry, and you'd have your stop right here, I believe, right? I'm seeing one PD array, two PD arrays, but this one also is covered. So technically it would be all the way down here. In cases like these, where, for example, here, I'll show you guys. This is my inversion fair value gap that I am utilizing as my third PD array, right? But my order block covers that zone. So it's a very specific area where instead of putting it at the low of the fair value gap candle, as I should, I'm going to put it at the low of this because it covers price trading back into that gap. Now, is that cherry picked? Well, some of you guys might say so, but that's the trade I took personally, and I took a partial at 2. Now, as I said, I should have had a full objective at this order block right here, but I did not, and seeing 4 standard deviations align with my target just gave me more confluence to target this. So this was my full target, but personally seeing 2 standard deviations, and as you can see with my stop loss, I was up 2R there. That was a very simple, quick and easy trade. And after missing out this down move, which is the move I was actually looking to trade, I was quite happy with taking the small retracement, taking the small win, went break even on the rest of my trade. And I actually got stopped out right here because I put it a little higher than break even in this case. So just looking at here, I'll show you guys. I put it at the start of this fair value gap. I basically got ticked looking back at it because I don't open my charts. When I have a runner in the markets, I'm looking at specific times only. So I wasn't in front of my charts when I got stopped out. Removing this, we have a clearer view. If you weren't so cherry picked about your stop loss and it was right here, you'll notice that you would not have reached your target and you would have still been holding at this point. And for me, I mean, you can look at this and say, oh, well, look, you would have gotten stopped out at 230. There is no way I'm staying in a trade that long, right? Unless I am in very big profit. And here, I would have gotten stopped out break even because there is no way that I'm having a trade, return to the first premium in efficiency in my reversal range, reverse on me when I was up 1.64R, and not be break even. So I would be lying to myself if I said that I would have taken profits with that stop loss. Truth is, I would not have taken the trade with that stop loss. That is way too large for me. For me to make money on this move, I need to have a 200 handle retracement. As I explained, I'm looking at upside movement as retracements. I'm not anticipating that it will be a big move. Our recent move to the downside was almost 500 handles. But it does not need to return to the midpoint of this. And from my entry, I'm not expecting it to do 200 handles more. So that's definitely a break even for me. Right, so definitely if you had this stop loss, which is where I'm bringing in to you guys, giving you guys more insight. The 3 PD array rule will give you the best stop loss 95% of the time. And now this is a bullshit number. I'm not going to lie to you guys. I don't have specific data because how can you quantify the perfect stop loss? But based on my understanding, my experience in the markets, I very rarely don't have a 3PD array stop loss rule. Today was one of them because this is an important point in market structure. This gap, we should not need to return to here. If we go back down here, my idea is invalid. That was my whole mindset with this move. I wanted to see speed. I wanted to see us retrace to that first inefficiency very quickly. Now for myself, it was just a small win because I got a partial and got broken even on the rest. I really was looking for that first 5-minute premium, but I still made money and I missed the real move. So what if I got the real move? Well, honestly, I just didn't get a setup on this specific one. I did not look at SMT in here. Honestly, I was more, well, I mean, I see it now that there's nothing, but live in front of my charts, I was more focused on not clicking the button. Really, that was my only goal. Because when I see it falling like that, it is very easy to just put one contract, right? Just put one contract. If I lose it, who cares? I'll just lose like $200-300. But if I win, I'll make like 3-4K because it is bleeding right now. But I don't like doing that because that goes against my system. And right now, my job as a trader is actually not to make money. It's to build myself into the best trader I can be for the next 10 years of my life. And for me, that plan includes following a system. So I don't care if I miss out on moves. I don't care if I miss trade moves because my only vision is for the future. So I focus on that. I could have also looked for a long opportunity during the 1050 to 1110 macro. We'll look at it right here, 1050 to 1110. I need to get me an indicator that does this for me. But looking at this, very simple. You had a breaker block form pretty much right away, right? In this case, let me mark it out. And macro. Breaker block. There it is. I was having a hard time there. But as you guys can see, I don't have an entry on this move. And the only entry where, by the way, if I'm looking for a long, what kind of entry am I looking for? I'm looking for us to inverse a fair value gap and trade back into it, or trade into a fair value gap. There are none. And then I see this inversion fair value gap right here that we never traded back into. So even though there was a breaker block, doesn't mean there was a trade for me to take. Now, further down the line, would I have considered taking a late trade here? Well, first of all, we're at for after 11:30. And as you guys know, if you were here yesterday and the day before, I don't trade past 11:30 in the AM session. And we can look here for a short. But once again, how can it justify taking a short where we just induce this liquidity without SMT? This is not a high probability high. And actually, I am seeing SMT. Right? Yes. Okay, so this is me seeing it wrong this morning. I should have full take profit here because ES reached my objective, even though NASDAQ didn't. Wow, I did not see that. So actually, in this case, I would have been looking for longs going into here. For short, sorry. That's what I'm saying. Because now that my retracement objective has been reached on ES, I can't believe, I'm sorry guys, I'm having a hard time believing that I didn't see that this morning. But I guess it is what it is, right? But SMT here means my objective is met and I can now start looking for shorts. And truth is, I just didn't have a short setup. Or was there one here? No, this is invalidated. I'm looking for setups, but no, I don't see a short setup here. And then once we trade back up, same thing happens. There's no SMT at those highs. We just induced those highs. I can't take that short because that's never going to be a high probability framework for me. I need to give it time to go lower. And after that point, it would have been a PM trade. Now, we had a very nice PM opportunity for a trade, and we're going to talk about it because these days I haven't seen a lunch trade in a little bit of time that was this clean, right? So we're going to talk about the PM trades, but for the morning, really focused on I wanted to catch this short. You could have been in this long, and truth is this would have been your take profit because SMT was there. I personally missed it this morning. Now looking at the PM session, you guys know I only trade two things in the PM. And the first one on that list is always the lunch rate, because that's the first one I'm going to be looking at. I'm going to be looking at noon to 1:30. And as you can see, there are no lunch rates. But what do I know? Well, if the morning consolidated or reach its retracement objective, I can look at noon to 1 range. And then I see that we have a raid on the high of that range. And once again, did the morning reach our objective? Yes, it did. Confirmed with SMT. So I can use the noon to 1 range. I'm still going to be waiting for 1:30 to take a trade, just like in the morning I wait for 9:30. I'm waiting for my session open before I look for a trade. And in the PM session for me, that is 1:30. And if you look, your entry is 1:30, like quite literally. Did we have SMT on those highs? I do see divergence, but I want specifically SMT. Yes, we do. Right here, this is higher SMT top. And this is this equal? This did not look equal. I thought this was lower. But as you guys know, when ES forms equal levels, I treat it as if it took it out. So no SMT here. Doesn't mean no trade, just means a lower probability trade. Now in this case, I do see swing high to swing low here, which would form a lower time frame breaker. Do we have another one? No. Okay, this is a weird one, because you guys know, I always tell you, when I see this price action, right, and these candles specifically, right, let's forget about this bottom one. What do I see? Well, I'll draw it out for you guys. I see that price went up here, went down here, then went up here, then went here. Oh, and now I just messed up my drawing. If I move this to the side, if we trade back down here, this is a breaker block. So it's easy for me to see this because I'm so used to it, and I feel like I say that every time now. But looking at this, as you can see, exactly what happened. Open, we went there, we went down there, we went up there. This forms a breaker range, right? Once we break through it. So yes, you could have went on the lower time frames, but even without going on the lower time frames, you have a breaker block within this range. You just can't see it because it's not a candle, right? I'm looking for a bearish breaker. I'm going to be looking for a bearish candle. And in this case, it isn't. But this is also a breaker range. So your true breaker block is this one. Now, I do understand that what I just said is extremely fucked up for some of you. All right. So we're going to look at what if you didn't know that. Because for me, if I'm looking for this, it's very simple. At 1:30, I'm waiting for fake move higher. That move higher happens, I'm entering. Right? I'm in this fair value gap right here. 100%. But let's be pessimistic here for a second. I'm just spamming buttons randomly, am I not? What if you didn't see this? Because it is hard to see, right? Let's be honest. Well, you have a range that was formed just a minute before we opened the PM session, took out the high of that range, and then we took out the low. And this seems equal. So let's actually mark it out further. The low of this is, well, anyways, I told you guys, when we form equal lows at the point that would form my breaker, it just gives me more confidence that we're going to go for it. So for me, that's good. But anyways, if you thought the breaker was formed here, you had no entry. All you had was an inversion fair value gap here that was previously mitigated multiple times. So am I going to use this as an entry when we return to it? No, because this is balanced for me. We've had both sell side and buy side delivery inside of this. So I can no longer use this. But if you waited here, right, you have that breaker block form. This is now a breaker block. Well, where's your unicorn? Well, the first one I see, well, let's actually look at some inverse fair value gaps. No, there was no entry before we traded back into this. So I like to be thorough in this case so that I really tell you guys the mechanical approach to it. Right? Because sometimes I might enter on the wrong candle. Maybe sometimes I took a little bit of a later entry because I didn't see the first one. I'm not perfect, I'm human. But when we're looking at this, I really want us to follow it with mechanical rules. And you'd have a very beautiful entry, of course, some little drawdown there. I didn't even check the stop loss. Let's look at it. You have fair value gap here. You do have an inversion fair value gap to the left as well. And then the fair value gap here. or even an inversion fair value gap there, that just falls within. So technically you have 4 PD arrays for that stop loss. I did look at it, I just didn't mention it. So I wanted to give you guys the details. Now, is this my target or my partial? This is my target, so I need to find a partial. How am I going to do that? I'm going to open my 5-minute chart, look at my range, and find the first discount in efficiency, because in this case, I'm shorting. Here it is liquidity. This will be my partial. Once again, going about it with our rule-based approach. So you would have had a very nice PM continuation trade of 2.8R at your partial, and then all the way down to 6 here. I'm not gonna lie to you guys, if I'm up 4.71R on a trade, I'm gonna try and take a piece out. So this would be partial number 2 for me. But once again, I've told you guys, this is a psychology question for me. There is money on the table, let's pay myself. And at the end of the day, if it means that I'm losing 0.5R on my trade, I am happy I did it, because that was the safer play. And long term, I know that's going to work out better. I mean, I've done the math multiple times over, actually. So I do remember. Very nice short here. And of course, if you held on to this trade, we bled, right? If we're talking about bleeding, we really bled. And I always give you the rule, and this is not hindsight, because I told you guys literally yesterday, you close all your trades at 4 p.m. This is the 4, where is it 4? Where is 4 p.m.? So this is 4 p.m. So 4 p.m. close, right? Because TradingView candles, the one that starts at 16 means that it, well, actually, is this a 4 p.m. candle? It starts at 4 p.m. All right, I'm having some trouble with NinjaTrader and TradingView because they're different. So let's use the open of the candle. Let's be pessimistic here. And as you can see, this big red line, what is that? That is what our objective has been for a while now. So very nice. But as I said, we definitely bled. And if you entered all the way up here like I wanted to, it would have been definitely a very nice day. And once again, I say nice, but we just went down 4% in a day almost, 3.7. So it's a rough day for a lot of people, right? And in days like those, I don't like to advertise what I do too much, just because I don't want to be speaking about how I'm making money while everybody else is losing money. But that's how it is sometimes. What's up, Nine? Nice to have you show up. We're almost done, sadly. I was about to give Faraz the floor, actually, because you said you had a lot of questions for today, Faraz. So hit me. You sent me a message. I'm going to look into it. Definitely. For sure, for sure. I'll answer you right after this. You don't right now? Awesome. Well, not awesome, but good. Because if you don't have any questions, it meant that we were clear. So sorry you showed up at the end, 9. I'll definitely check in on your message. Glad you stopped by to say hello, though. Awesome. Love to hear it, Faraz. Love to hear it. Well, on that note, guys, I'm going to wish you all a very good night. Very good night. And we'll see each other tomorrow. Now remember, tomorrow's price action review will be slightly earlier, just after market close at 5 p.m. EST. I want to give our European friends a little chance to join our lives, right? I've had a lot of requests for it, so whenever we have a lot of price action reviews on the week, like for example, this week we had 4, well, one of them is going to be slightly earlier. Give them a shot. You guys have a great night. Good luck trading tomorrow, and we'll see each other tomorrow night. Bye, guys.